Hello everyone and welcome into the channel. My name is Brent, and in today's video we are going to cover fidelity changes in the portfolio. So in our last video we had made a little bit of a snippet in there where we had made some changes within our Fidelity account. Today we're going to go ahead and cover the changes that took place within the Fidelity account. We're going to be taking a look at why I sold out of VOO and why I chose the ETF that I decided instead of other ones. So I'm going to be doing a comparison between SEHD, VOO, VTI, and SPY. And we're going to be taking a look at total performance over the past 5 years, 10 years, and we're going to be taking a look at their option in order to kind of make, come to the decision that I made as to why I decided to move into this position with the equity that I had available in the account. So with that said, if you guys are brand new here, definitely go down below, like, comment, subscribe, and let's go ahead and get into the video. We're going to be going through different screenshots over the activities of the Fidelity account. I am very new to actually using Fidelity active. For the most part, over the last several years, we had invested the capital into 19 shares of VOO that, it was worth $7,228.87. Now, I decided to sell out of VOO because I saw that there were other options available. Of the other options that are available to me, I was taking a look at SEHD, I took a look at VTI, took a look at VOO, and of course, SPY. These are both the same. Essentially, they have like the top 10 performance holdings of VOO and SPY. They're both S&P 500 funds. The only ones that really are a bit different are SCHD and VTI, as SCHD has 100 individual companies within it, totaling no more than 5% in each holding. VTI has some 2,000 and some holdings within it. They can range from tiny percentages to I believe not more than 3 or so percent, I believe, in some of their top holdings. VOO and SPY, their top holdings are Apple at 7%, and what was the other one? Microsoft at 5%. So between Apple and Microsoft, that's 11% of their portfolio performance between VOO and SPY. So they're a little bit different in their holdings overall. When I took a look at I'm looking at long-term, how have these ETFs been able to perform? The 5-year return, Schwab was 12.01, VTI 10.35, VOO 11.13, and SPY 11.13. So on average, anywhere from 10 to 12%, depending on the ETF that you invested into. The 10-year return, everything kind of balances itself out a bit more here. 10-year, the SCHD was at 12.09, the VTI was at 11.68, the VOO was at 12.22, and the SPY was at 12.15. So we're going to say about 12% on average return per, over the last 10 years. That may not be the same results going forward, but at the bottom here, we can see that inception, all of these ETFs have been active for the past 10 or more years. Schwab from 2011, VTI 2001, VOO 2010, and SPY, the longest running ETF, 1993. So that's just a little bit of, hey, I sold out of VOO. I took a look at other ones that were very similar to VOO and, kind of went along with how I want my money invested, right? Taking a look at these in comparison, 10 years, this is the 5-year, we deposited $10,000 into each one of these, Schwab, VTI, VOO, SPY. You can see the performance over time. There was a dip in 2019, grew into 2020, dipped, what took place in March 2020, and that as of that point has grown significant. All of them are pretty in line here. You can see, but the top winner here is Schwab, just by a bit. They haven't had the best performance here in 2023 because they've already outperformed the other ETFs, so they also haven't fallen by as much. If you see year to date, they're down 2.33%, while the other ones are up year to date. That is just because they're still ahead of the game as far as total return over the past few years, so they haven't fallen as much as the other ones. Their risk in comparison to their risk is very low on the spectrum but their return is still just as high as the other ones, if that makes sense. Okay, so I said, hey, of these funds, so far SCHD is having the best performance. Now, the next piece that I took a look at was their option chain, right? I took a look at, I sold out of $7,228. So I only have that amount to invest in, but I still wanted to take a look at, for example, if you guys have more equity than I do to invest, you may also have these options or more, right? For right now, I only really have the option of buying 100 shares of Schwab, but I wanted to compare if I had more equity, say, for example, the amount of equity needed to buy 100 shares of SPY, how much equity or option premium would I be able to collect versus the difference that I'm using for SCHD, equity wise, right? So here's my base investment. If I were to want to pick up 100 shares of SPY at $415.93, it would take me $41,593. Now, I put that towards the same thing of VOO, price at $382.05. That would buy me 108 shares. VTI at $206.30. That would buy me $201 shares. And if I purchased SCHD at $72.57, I would be able to purchase 573 shares of SCHD. So that would essentially let me write 5 contracts on SCHD, 2 contracts on VTI because I have 200 shares plus. I'd be able to write 2 options. Each option chain is 100 shares. VOO, I have 108, so I'd be able to run one option, and SPY, I'd be able to run 1 option. So after I did this, I found out how many contracts I could open. Next, I went and looked at the risk. How much risk was I willing to risk on a monthly basis? So next, I went out by 1 month just to kind of keep everything in line. Not just in May, but up until February, June, right? June 16th is when these options are going to set to expire. All of these that we're using in this example. So SCHD is priced at $72.57, and here at $72.57, a $74 strike price would have an upside risk over the next month and a half of 1.97%, just for this example. VTI priced at $206.30 with a strike price of $210 would have a 1.79% risk right there. Now, the thing with VTI, see that strike price of $210? VTI only gives you intervals of $5. So if you want to have, you can't have anything like $212.50. You have to go 210, 215, 220. So you don't have the option here where it's every dollar interval, 73, 74, 75, 76. There's a big difference between 210 and a $215 strike price. So if I go here and I punch in $215 difference, I just went from 1.79% upside risk to 4.22%. And I also reduced my premium from $290 per option to $100. So that's basically a three times cut in the premium that I would collect. I'd go from nearly $300 to $100 of premium collected based off that difference in that option. So I wanted to kind of keep these in line, but this offers the greatest risk of a 1.79% upside. So if the share price climbs by only 1.79% by June 19th and closes at $210 or higher, I would have to sell out of my shares at $210, which is only a 1.79% difference to the upside. So this could potentially happen more than this one. And you can see here, it would have more risk. But you can see here, these 5 option chains at 65 cents. I got that right here. $74. I just went with the bid just to kind of make it easy. 65 cents is the bid. I'm not going for the ask because you can ask as much as you want, but they don't have, you won't actually execute your option. So I just go with the bid. Makes it easy. It executes pretty quickly. So 65 cents is what we're using in this example, and 290 is what we're using in this example. So 65 and 290, 2 option chains and 5. That would put us as premium on SCHD of $325, and yeah, no change. And VTI, those two option chains would net us $580. So you are getting a little bit more risk right there, but you're netting a bit more. If we reduced from $74 here to 73, we could do the bid of 110. Let's do 110 here. So let's go down to 73. See that risk now though? That's only a 0.59% difference to the upside. And then you might get more premium here. What's the premium? 110. Yeah, 110. Now you'd be on par, but still slightly under at $550 of premium. You'd be risking quite a bit more. Let's change this back to 210. And I think the premium on this, what was it? $1. Hold on. 290. 210. Okay, let's look at 210. 210 is 290. Okay, yeah, that's correct. Yeah, see, the risk difference here for going for $73 is 0.59% difference over the next month and a half. That is very more likely to happen than 1.79% difference. I would still net the same premium, but more than likely these shares would be pulled away from me. Very easy. I might get similar premium up front, but just have much more risk. So in this case, I just go with that $74 strike price and punch in the risk here of 65 cents. 0.65. 0.65. There we go. So yeah, less risk now, but I still get nearly almost half of the premium lost. So then I looked at VOO, right? 390 is our strike from 382.05. VOO is not bad. You can see it still has the same issue, $5 intervals at 382.05. Next one up is 385, 390, 395. So at a strike of 390 right here, that would have premium bid of $470, right? So I punched in $470, one option that nets us $470 by selling that call option. Here we take the least risk at a 2.08% upside. So the stock price would have to climb 2.08% over the next month and a half, where the market is already trading right below recent all-time highs for 2023. So there is the potential that the market could climb higher, but if we do break over, I think 216 and some change and close, that's going to put a lot of pressure to the upside, just kind of where this could potentially happen over the next month and a half, but not as likely as the other ones below it, right? So we're netting more equity than SEHD. We're taking on less risk, but this requires nearly $40,000 invested in it. So it's a bit different. Big difference there. And then SPY. SPY is the last one here. 100 shares. That's basically all of our equity invested. And it's priced at $415 right now and 93. So it really doesn't have to climb more than $1 to hit that new all-time high here in 2023. We had a strike price of 424. That put us at a risk of 194. SPY is not a bad one. I actually enjoy doing SPY. SPY has $1 intervals here. So 415, 93, 16, 17, 18. You have a lot of options with SPY. So if I want to go just 421, right? I could reduce my risk there just by going up a little or going down a little bit. I can also adjust it higher. So if I want to go 425, 425 here will net me 494. Wait, what's my bid? What was the number? What was the bid? Bid's the middle one, okay? This one right here. So 490, we'll say 490. 490, you'll still net me $480, but look at the difference there, $418. But I just want to kind of keep it in line. So I went 424. That's still near the least risk besides VOO, but with a strike price of 424, I'm now able to collect 500 and about 535. We'll say 535. I think that's what I had before. The screenshot here actually has it. 530. I put 538, but in reality, I think it's $5 interval, so it'd be 535. You can see here, we're not collecting as much premium of VTI, but we're taking a nearly 0.2% difference in risk versus if we're using VTI. So, I took a look at these, not because I could actually get into them, but just to kind of also showcase that if you guys do have equity out there, $42,000 worth or even less, right? I don't have a lot of equity. I just sold out of $7,200 worth of equity. That can only really net me 100 shares of SCHD. So that's what I did. I went ahead and that was the only option that I really had available to me. So on April 19th, on the same date that I sold my VOO, I sold 19 shares of VOO. So I could not do any contracts with this at all. Essentially, I was just at the whims of the market. If the market went up, if the market went down, my portfolio would just slightly move up and down slightly. So what I did is I went ahead and liquidated all VOO and I purchased 104 shares of SCHD. So that unlocked the option chain that I could now sell one option. Okay, with the price around $72, $73, I went ahead and wrote a call option. So I sold a call option on SCHD with a target price of $75. Let's go ahead and bring in the calculator. So I have a strike price of $75 right there. And I was able to get points. No, wait, this one's not as easy. Let's see here. 0.31. Yeah, 0.31 was how much I was able to sell it for. 0.31. 0.31. And I was only able to sell one. So here, I was able to get $31 in premium. So it's exactly what happened. Minus fees, right? There's 65 cents and a commission. There's some other fees right there. So in general, right? So you're trying to sell it for $31 minus commission, minus fees. I was able to net $30.31. Now, one thing that I really do like about Fidelity that I don't have the option on Merrill Edge, I think I just need to do a little bit of research, is when you have cash in your account at Fidelity, it automatically gets swept into SPACs. So automatically on the next date, look at this. I bought it on the 20th of April. On the next date, it went and purchased into the Fidelity Government Money Market SPACs, $30.07. So there goes all the equity that I had in there and was swept away, right? The very next day, it reinvested. At the very end of the month, there's that interest. It hadn't been in there very long, only 7 days, but that $30.42 that was just sitting in the account was able to be reinvested into that was invested into that money market account, paid out 4 cents in interest. And that was just reinvested back into these SPACs. So it went up from $30.38 plus those 4 cents from interest to $30.42. So it's kind of interesting. I definitely have more options than I had with VOO. With VOO, I just was at the whims of the market, 19 shares. I couldn't roll any options. I was netting as much or similar returns versus VOO, right? I just sold out of VOO this month. So I already collected the majority of the returns that had taken place. I got those year-to-date returns, liquidated VOO, and moved it into SCHD, where I was able to write an option, collect over $30 of premium, move it into SPACs, and begin getting interest. So this is just the full chain of events here that took place from the 19th to the 30th. And I think going forward, obviously, as we kind of went here in the calculator, the more equity you have, it unlocks different options. SCHD is not the best. If you have a large amount of equity, it would not be the best for its what am I trying to say here? For taking the same amount of risk in SCHD, you're not compensated as much premium as if you took the same similar amount of risk in another holding such as VOO or SPY, you can see that you can net nearly $150 to nearly $200 difference with the same amount of risk, and you know, just by having the extra equity. So all in all, when taking a look at these prices, right, you can see that SCHD is not the best ETF to use if you're trying to have similar risks between SCHD, VTI, VOO, and SPY. You can see that these are all very similar risk, with VTI having the highest risk but having the highest reward. But they're all very, very similar, right? But as you grow your equity, say as you cross the $40,000, $42,000 mark, I would, in my opinion, and what I've done in my other accounts, right? Merrill Edge, I believe, over 400 shares of SPY. That's my main option that I trade with. I could use SPY for this example, have the same level of risk by using SCHD, but instead use SPY, and I would nearly net $200 of more option premium with the same level of risk. Plus, SPY allows you to not only have, similar to SCHD, you could do those dollar increments. You don't have to do the $5 increments as you do with VTI or with VOO. SPY allows you to have $1 increments to have better selection of your risk to the upside, and they don't have monthly call options. SPY actually ends up having weekly. Sometimes it's every couple days on SPY. You can have options on a Monday, on a Wednesday, on a Friday. Sometimes, depending on how volatile the market is, they have option chains every day of the week. So you can go ahead and open an option for next Friday, and you can do weekly options on a weekly basis where you can have a 2% risk, to the upside and still net a reasonable amount. I don't think I have the option. Where is it? I don't have Merrill Edge pulled up to kind of showcase that information, but that's just something to kind of think about. I just wanted to kind of discuss this a bit, kind of showcase not only activity in the Fidelity account, why I sold out of VOO, but why I came to the decision to move into SCHD is just because the amount of equity that I have available in the account, that is the best option at this time, with that I'm able to use to acquire some amount of premium. But as I begin to get more equity in the account in the future, if for example, I do move over the M1 Finance account, that is a Roth IRA, and I move it into the Roth IRA over at Fidelity, then if I have, which I do have, over $40,000, I would then use SPY as my main option and just collect 100 shares of SPY, if not more, and begin running options with that one. So that is the breakdown of the video. So let me know down in the comment section below, do you guys own SCHD, VTI, VOO, or SPY? Let me know down in the comment section below. If you guys are buying and holding individual holdings, how have your performance been here in 2023? Are you also investing in dividend companies? Are you investing in companies and running options? Let me know down in the comment section below. I would very much appreciate it. Again, if you guys have not yet subscribed to the channel, go down below, hit the button to subscribe, make it gray, give this video a thumbs up. I would highly appreciate it. And that is going to be it for me. I hope everyone has a good day, and I will see you guys in the next video. Bye-bye.